considering everything that is going on with Tesla stock right now. Are you a bull or a bear? Even experts are unsure about how to view Tesla stock given the volatility of the stock market right now, although many believe that it will rise in 2023. A year ago, you wouldn't want to miss this. Currently, Tesla is at an all-time high and has dropped to 2-year lows. Just before Christmas, volatile of content creator Stephen Mark Ryan, a YouTuber who covers Tesla stock, tweeted, "Tesla reminds me of dating some of the cray-cray women of my debaucherous youth." Mark Ryan owns some Tesla stock based on his Twitter bio. In a tweet, Stephen Mark Ryan shared his thoughts about Tesla CEO Elon Musk. He said that while it has been interesting to watch all the discussions, he was surprised by how many people genuinely believed that Musk might stop speaking out on issues that were important to him. He compared it to telling a fish not to swim, saying that people are entitled to their opinions and that he encourages discussion. In the subsequent tweet, Stephen Mark Ryan emphasized that Elon Musk will always act in the best interests of humanity, regardless of the backlash, criticism, or heat. Of course, some people may disagree with Musk's beliefs and he may not be open to hearing from them, but Ryan believes it would take a very dim mind to deny that Musk cannot and will not stand by when things are important to him, particularly when he sees a long-term risk to humanity, one that others cannot even perceive. In other words, Elon Musk is Gunner Elon and he won't try to change. Elon, it's okay if you don't like it, but trying to hope, desire, or beg Elon to change will not work. He concluded by saying that many people think that in the face of uncertainty and controversy surrounding Musk, they put their trust in him. This is not to say that they do not have any reservations, as that would be impossible, but rather that they are placing their bets on Musk and what he thinks he can accomplish for the business and the globe in the long run, according to a NASDAQ article. In 2023, Tesla might ship over 2 million cars. If this occurs, the anticipated increase in the company's shares is likely to occur in August. Although Tesla's Shanghai factory faced significant setbacks earlier this year when the local government restricted factory operations as part of its efforts to slow the spread of COVID-19. Wedbush analyst in IVs highlighted Tesla's improving production rate at its high output factory in China. Company's overall momentum heading into the end of the year. When investors consider this momentum, along with Tesla's reported continued improvement at its factory in California and its ramp up in production at new factories in Texas and Berlin, they see that production rates at the significant factory have not only recovered, but have reached record levels by the end of the period. Tesla shared this information in its Q2 update. Given that Tesla's factories are presently outfitted for annualized production rates of more than 1.9 million units yearly, and that the company's management has shown no indication that it will reduce its investments in expanding production capacity, 2 million deliveries in 2023 start to seem plausible. Tesla CEO Elon Musk stated during the Q2 earnings call that the company has a good chance of exiting this year at 40 vehicles per week, which translates to an annualized run rate of more than 2 million units a year. Furthermore, while delivering 2 million vehicles this year would be an exciting achievement for Tesla, it would only represent a fraction of the company's vision. Tesla management has also indicated that it expects to have its current manufacturing capacity fully utilized by the end of the year. Musk stated during Tesla's annual shareholder meeting that the business eventually wants to have constructed 10 or 12 plants, the new ones being able to support a tremendous annual output of approximately 1.5 million automobiles. Tesla bulls believe the electric vehicle company would prosper in spite of obstacles. In fact, in 2020, when the global COVID-19 pandemic was at its worst, Tesla's share price increased by more than 700%. Is a piece published in the journal American magazine Barron's stated that at this time, Tesla stock may rebound in 3 months. Following a disastrous 2022 and CEO Elon Musk's involvement with Twitter, investors are curious about what the future holds for Tesla stock in 2023. Tesla has historically been a monster stock, particularly during its stratospheric run from mid-2019 to late 2021. However, in 2022, it has been a big loser, down about 65% since the start of this year and down about 44% since Musk completed his controversial acquisition of Twitter in late October 2022. To the dismay of investors, Musk purchased Twitter in a contentious $44 billion deal and sold billions of dollars worth of Tesla stock, helped finance the purchase. Shaking up the workforce, management, and staff throughout the company, Musk has also alarmed Tesla investors who have grown increasingly impatient with the amount of time and money he has spent dismantling Twitter in an attempt to rebuild the social media site to his liking. In light of this Wedbush analyst, Dan Ives outlined the task must needs to complete in order to turn Tesla positive in 2023, including appointing a CEO by the end of January, ceasing to sell stock. He has sold roughly $40 billion worth of Tesla stock in the previous year and outlining the strategic plan for the platform. Quite simply, I've stated in a note to clients that the fear is that Twitter is losing money due to advertisers departing for the time being, meaning more losses. Sales of Tesla stock, he stated that Musk has to return his focus to Tesla and declare a significant stock buyback in the near future. Full Tesla Ives added that worries about the potential for a prolonged production stoppage in China in January, putting a lot of pressure on Tesla shares since China is the main supporter of the Tesla bull thesis. Worries are growing around with the softening. Demand picture looks like for 2023, given the dark macro clouds and increasing domestic EV competition. He said he also thinks that higher inventory levels, recent price cuts, and overall production slowdowns in China suggest that Tesla will likely miss reduced street estimates for the fourth quarter. And he expects a softer trajectory for 2023. It is no secret that Tesla has experienced number of setbacks lately. The company missed delivery estimates in the third quarter. And while management had previously guided for 50 growth in annual deliveries, FFO Zachary Kirkhorn recently said deliveries would fall just short of that figure this year. Tesla places the blame on its batch shipment strategy, which creates logistics bottlenecks near the end of each quarter. It certainly did not help matters when Tesla temporarily shut down Gigafactory Shanghai in response to a surge of COVID-19 cases in China, which arose following the government's easing of zero-COVID policies, according to the Wall Street Journal. Gigafactory Shanghai is Tesla's largest factory in terms of car production. Thus, its closure could result in fourth quarter deliveries that are significantly lower than anticipated and possibly one of the most significant. Electric car company desperately needs Elon Musk's leadership to focus on issues facing the social media platform as a whole. Many analysts have expressed concern about Twitter, pointing out that Musk may be ignoring Tesla and its shareholders. The bear case is compelling and worth considering, but it centers around short-term issues despite delivery shortfalls and softening demand. During the first 3 quarters of 2022, Tesla sold more fully electric cars than any other automaker, capturing an 18.5% market share. Despite this, 6 analysts recently lowered their price targets for Tesla stock, but these targets remained well above the current price levels. Overall, analysts have generally maintained and exceeded ratings. Baird Danalist, in a recent note to clients, Ben Callow called Tesla a best idea stock for 2023 and maintained a buy rating, stating that the company is still well positioned to profit from the increasing demand for electric vehicles. We continue to believe that Tesla is the best positioned company in the auto industry as electric vehicles continue to gain market share. Please subscribe to this channel for more incredible updates on Tesla stock.